Hello, this is Corner Invest. So the stock market is selling off again today. The S&P 500 is down more than 3% today in one single day. And we are getting into sort of like bear market territory soon as well. So in today's video, I'll be talking about these few things over here. I'll be talking about the massive sell-off and what exactly to do. I'll be talking about Tom Lee getting bearish again, as well as some questions that you guys have left in the comment section. So the sell-off today has been quite massive. So across the board, can't really find a company that is in the green. So there are some consumer defensive companies that are in the green. Other than that, the broad markets are just extremely red. So you have Microsoft over here down 2.5%, Google down 3%, Nvidia down 6%, Amazon down nearly 4% as well, and even Berkshire is down almost 4%. So this is a broad market sell-off, and this sell-off could just keep continuing over the next few weeks and months or so. No one knows. Let's see what is going to happen. So this is Nvidia over here. Nvidia is down more than 6% because China, they basically had a deal between Huawei as well as all your different other companies to sort of like up Huawei's chip production to compete against Nvidia's chips. So this news came out after the Trump export ban on your H20 chips from Nvidia. So Nvidia was initially selling your H20 chips to China, but then they were banned after Trump imposed sort of like export restrictions on them as sort of like countermeasure against China tariffs on the US. So this is likely hitting Nvidia over here. For Nvidia, I think it's a stock that is still not extremely undervalued yet. My fair value for Nvidia is around $90 or so. And if you have to just account for all these tariffs and all that, likely the intrinsic value have gone down a lot more. So maybe around $80, $70 or so. And that will be likely when I'll be entering into Nvidia if I understand the business enough. But for me, I think Nvidia is too heavily reliant on just the AI story. Once the AI story slows, once you see capex starting to come down, then this is when companies like Nvidia will take a hit. So for me, I'm not investing in Nvidia unless it drops around $60 or so. That'll be the time where I'm look into sort of like entering into this stock. Next one is Amazon. So Amazon over here, they're down quite a lot today because of this news over here. So data center, AWS goes on a pause. So AWS pauses certain colo deals. Over the weekend, we heard from several industry sources that AWS has paused a portion of their leasing discussions on the colocation side. It is not clear the magnitude of the pause, but the positioning is similar to what we've heard recently from Microsoft. They are digesting aggressive recent lease-up deals. However, we don't know if they are cancelling already signed deals or simply pulling back from a pipeline of LOIs or SOQs. So we can clearly see that the AI data center is cooling already. So you have companies like Amazon, Microsoft back then as well, slowing down all these data center leases. And if this continues, then you see all your chip companies or your data center companies getting hit quite massively as well. So this is bad news for Amazon over here. So there are a few tariff impacts that can be implemented on Amazon. So China accounts for around 50% of third-party sales. China makes up around 20% of Amazon's total imports, and the top line will be hurt for sure. So for Amazon, the business is still extremely reliant on the retail side in terms of the revenue. So the revenue breakdown is like that. So they have around 40% of their revenue coming from online retail, and then they have another 20% which comes from physical stores and all that. So if this tariffs continues to hit on companies like Amazon, then you can see the top line revenue coming in by quite a fair bit because consumers will start pulling back on their spending whenever all your different tariffs come into play because your products will cost a lot more than they did previously. So this is what I'm doing with Amazon. Amazon is a company that is going to be hit in terms of its earnings, but this is a company that is growing in all fronts, capturing market share in all forms. So this company over here has all your different other businesses outside of retail as well. So you have subscription, you have advertising, you have all your different AI startups and AI projects that Amazon has been pursuing as well, Anthropic, for example. And so I think for Amazon over here, although it will be hit in the short term for tariffs, in the long run, this is an extremely high quality business that will likely give you incremental returns over the next 5-10 years or so. And there shouldn't be a worry about the tariffs that come into play for the next 1 to 2 years or so if you're a long-term investor. So this is a company that is a cloud leader in the cloud computing space as well, Amazon with their AWS. And Amazon's AWS is the most sophisticated out of the 3 hyperscalers cloud providing services. And Amazon is one of the most entrenched ones in terms of its cloud computing space. So for me, I think Amazon is a high quality business. I'm not planning to sell this one. In fact, I'm looking to add to my position as the stock price continually sells off. Let's see where it goes. Hopefully it sells to the prices that I want to enter at. So this is Amazon's valuation over here. As you can see, EV to EBIT is down at around 27 times. This is the lowest in terms of Amazon's history. Same thing for its price to operating cash flow. Price to operating cash flow is at around a 15 times right now. The median is around a 20 to 25 times. So somewhere in the blue area over here, which is where it has historically traded at over the past 10, 20 years or so. So for Amazon over here, it is currently trading at one of its lowest points in terms of its valuation. And so for me, I'm looking to add into more of Amazon. This company is high quality, the valuation makes sense. So this is Amazon's margin story. So retail has never been part of the margin story that I had for this business because retail only has around 1% operating margin and probably around a 0.5% net income margin or so. It's been subscription, third-party seller, and advertising. Third-party seller will likely be hit when the tariffs come into play as well because China makes out around 50%. And so this portion of the margin story could be affected. But you have subscription, advertising as well. Those two fronts can see a lot of margin expansion. And if you're to just play with the numbers also, if Amazon can increase the operating margin of the advertising portion as well as the subscription portion to levels similar to Netflix, Google, Meta, then you will see a lot of earnings expansion for this company over here. So of course, the tariff will cause a ripple effect for this company because less people coming to the site will lead to less advertising dollar and less subscription dollar as well. But over the long run, I don't think these tariffs will be having a long-term impact on Amazon, and that's why I'm patiently buying into this business as this continually sells off. So this is Tom Lee over here, the greatest bull in the stock market, and now he's getting slightly bearish on the stock market. Let's see what he said about the stock market today.
Let's look at the futures this morning, down 340 points on the Dow, S&P down 52. I don't know if we've shown a chart of gold that, but another $80 or something this morning. Bitcoin up almost 3.5% as well. For more on this, I'm already talking to you and I haven't introduced you. Let's bring in Tom Lee, Head of Research at Fundstrat, Chief Investment Officer at Fundstrat Capital, as well as a CNBC contributor. And I don't remember whether it was you or Pump when we were talking about Bitcoin sort of stuck under 85,000 with gold going up every day. And it was either you or Pump that said Bitcoin usually follows a couple of months later, but has a much bigger move.
That was probably Pump.
Yeah, he's pretty bullish.
Yes.
Have you noticed anything similar to that? I mean, that's a pretty big move. And in the past, gold's been leaving in the past near term, 2 months, 3 months, whatever. This year, maybe we have seen gold leave Bitcoin in the dust and go to new highs. Looks like it'll do 4,000 easily, right? Do you think Bitcoin eventually catches some of the same money, the same bid?
Yeah, I think Bitcoin earlier this year may have been struggling with some of the deleveraging that was happening for institutional investors.
Selling what they could.
Yeah, selling what they could, and I think that suppressed Bitcoin, especially over weekends. But now that deleveraging is done, I think that Bitcoin is going to catch up to gold, and Bitcoin's old high was over 110,000. So I think there is a lot of room to catch up as a sort of non-dollar asset.
As for the equity markets, you think stocks are attractive, but uncertainty is still the name of the game, and it's going to persist. Do you think the high in the VIX, what did you say that was on April 7th, that holds?
Yeah, I think it's going to be hard to match that level of fear again. So I think we're probably past peak uncertainty. I mean, even with this Fed controversy, but I don't know if we're past maximum pain. I think that there's still risk that the economic consequences are going to cause markets to be hesitant, but it's going to be hard to match that fear again. So I think a structural low did take place.
So I don't know if I really think it's going to be hard to match. I could get a lot more. People were pretty fearful.
Yeah.
But you don't think this is going to be the absolute washout that some people are thinking, something similar to past breaks that were really significant. So let me ask you this, and just specifically, does the S&P have a closing bear market low from here? What are we down, 14% now, something like that?
Yeah, I mean, 4,800 was the low we made a couple weeks ago.
Yeah,
and I think that there's a chance we could be drifting dangerously close to that again in the next couple of weeks, because there's still probably a lot of investors sitting on their hands and there's uncertainty. But on the flip side, I just think that we have to keep in mind that, one, companies are very resilient. and we'll learn about it during earnings season. But we could have a positive policy shock as well.
There was apparently...
What does that mean? Like a backing off of some of the tariff?
Yes, we could have something that the market sees as a win. You know, whether it's going to be one of the 15 countries that we have a trade deal with, or a de-escalation with China, which of course overnight didn't seem like that was a possibility, but there is room for a positive policy shock.
So this is what Tom Lee has said about the markets right now. He still doesn't think that the markets are in maximum pain yet. So he thinks that we have a lot more downside to go in terms of forming a bottom. Normally your bear markets, they don't last for 1 to 2 months or so. They are often sustained periods. And if we were to go into an actual bear market, then it will take a few months, maybe around 6 to 12 months or so, for the market to really go and carve our bottom and then start rallying from there. Again, if you're a long-term investor, then I don't think this should be a problem at all. Just buy and hold and wait. Just keep buying on the way down as the market continually sells off. Unless we go into a depression like back in the 1930s, then I don't think there should be a problem for you to buy into stocks right now, especially those that are of high quality. Last portion over here that I'll be talking about is some of the questions that you guys have left me. So the first question over here is, what are your thoughts on DEC? DEC Outdoors owns ARX as well as Hoka, recently plummeted by Trump's tariffs, currently trading at around a 17 times trailing 12-month earnings, and fundamentals seem solid, consistent, strong revenue growth with steady margin expansion. I like their footwear products and could be a long-term potential play when Trump and the tariff fears are gone. So in my personal opinion, I think that fashion as well as footwear companies and all your different apparel companies, those are a void for me, because you have companies like, for example, Nike, Adidas, Lululemon, you have all your different other footwear companies as well in the space. Like for example, in China, you have Anta, you have Crocs as well. So there's too much competition in the fashion space. There's too much competition in the apparel footwear space as well. And so I think for me, DEX is an avoid, because normally your fashion stocks, they come and go very fast. So if you're to look at, for example, Abercrombie and Fitch as well as Crocs, those two companies, they have incredible fundamentals as well, growing 10-20% or so in terms of their revenue. But if you're to look at the stock price, the margin expansion, the fundamentals are extremely cyclical. So it can go up by 50% in 1 year, and then suddenly in 1 year, the stock can drop around 50% because the fundamentals are hit by around 40% or so. So for me, I think your apparel stocks, your fashion stocks, those are an avoid. The only company that I'll possibly consider in the footwear space is Nike. But again, Nike is a company that is being hit quite hard in terms of its margins because it doesn't have vertical integration. They need to outsource their products to all your different factories, which are hit by tariffs right now. So for me, avoid for that. Next company, would love your thoughts on AMD. So AMD over here is a company that is trading at around, I believe, a 19 times earnings. You have Nvidia trading at around a 21 times earnings. So there's no reason for you to go and look into AMD when you have Nvidia trading at a similar valuation as well, that is much more resilient, has greater moat in terms of its data center concentration, and that portion of the business, which is the data center, is normally the one that is driving the growth. So Nvidia over here, it clearly has superior chips to AMD. If Nvidia is hurt as well in terms of the tariffs, then you will likely see AMD being hurt as well. So there's no upside in owning AMD as compared to Nvidia. So for me, it's an avoid. I wouldn't even touch Nvidia, and that's why I won't be touching AMD as well. Last one, if you had to invest again, what would be your top 3 stocks you'll invest in the long term for the US market? So for me, it's simple. It's Visa. That's the first one that I'll invest in. Next one is S&P Global. And then the last one that I'll invest in is Microsoft. These 3 companies are the most durable ones. I hope you guys have found this one useful, and please invest safe.